Welcome guys, welcome to my stock crushing channel. Here we evaluate the charts. We try to make money using technical analysis. And let's get right into it. So if you're new, hit that thumbs up button. And if you're shorting the market, like I am, I'm actually pretty loaded up to the short side. So we'll see if this continues to play out. But let's go ahead and look at what we got. I'm going to start off with Apple. Apple's just a huge component of the S&P 500, so it's kind of a major player. And I put out, 2 days ago, I put out in the comments below my video from 2 days ago, I said, look guys, I'm shorting Apple, 284.20, I think was the price that I said. And I'm still short. I've actually added to that short a little bit. And so far that's working out. The reason why I went short is we just ran smack into this black line that I have right here, and this is your decade-long bull market trend line going all the way back to 2009. And as long as you know these levels and you understand the importance of the level, then you can take trades around them. So that's what I'm doing right now. We'll see if this holds. So we're getting some selling today, and so I'm looking. First thing, probably going to gap fill. That might even be the end of the move for today. This gap fill. And then we also have this upward trend line right here. We only have 2 data points on it though, so it's not anything that I consider a strong upward trend line. But maybe we'll get a reaction around it just because it's possibly a trend line. So down at 266. So that's kind of where we're at right now. I just have to play this, that's as far as I can take this on the short term. If that breaks and we start to head a little lower, then we'll look at some longer time frames. But that's what I'm seeing right now. I'm going to jump around a little bit here. I also closed my Barrick Gold position yesterday. The reason why I did is when we saw there was a spike down in the market yesterday that I saw. And if I can, let me see if I can show it to you here on the 1 minute. It was right here. So this spike down, when I saw this, Barrick did the same thing basically, and let's show it here. Here it is right here. So Barrick did the same spike down as the Qs did, and I'm short on the Qs, and I'm short a lot of other stocks, and I think we're going to get a sell-off. And when I saw Barrick kind of react the same way that the Qs did when it was selling, I just didn't like that price action. Barrick's had a really nice run, and I figured if we're going to get some sort of a selling, and Barrick wants to sell off with the Qs, then I want to lock in some gains on Barrick and buy it back at a cheaper price. I think Barrick is still going to be a buy. Gold is still in a bull market, and the gold miners are still in a bull market, so still a buy. But you got to know when to lock in some profit and look at maybe finding a better entry. So that's kind of what I did. Now Barrick recovered. Barrick was down like 5.5%. So this morning I thought I was right, and I thought where I wanted to buy it back was this 2250. Write it down here. That's what I was looking at. You can see we have a nice trend line right here. I think I'll get another shot at it, but this trend line basically. I don't know if it'll be 2250 by the time, but I think I'll get a shot at this trend line, and that's probably where I'm going to buy it back. But so far it's recovered this flag. We got this little flag playing out, and it's recovered that flag. So that might have been it for the buying opportunity. It's hard to say. I still don't own it. I'm gonna just wait to see how the markets trade today, and I'll make a decision later on. So that's that. Here's the Qs. All right, Qs. So futures last night gapped up huge, and one thing about being a short seller is you always have to look for the trap. They're always trying to shake shorts out before a big move. And the market, there's a lot of forces that are at play to prop the market up, and not nearly as many forces that want to, see the market come down. Wall Street wants the market to come down after a nice steady uptrend, because the professionals can make a killing when in money. And you'll see that the bank earnings, their trading desks made a fortune trading the crash that we just had. And that, for the most part, professionals are the ones who short. You don't have a lot of retail guys shorting. You don't have a lot of pension funds and stuff shorting, obviously. You have, there's hedge funds that short and Wall Street, basically. And then there's retail guys like myself. But so when I saw the futures propped up, I noticed that they gapped up, and it was on, pretty much BS news. There was, the news was around, there's positive results for some medicine. Okay, that's great. Doesn't mean it's a cure, hasn't passed FDA. It was a long road to getting medicine passed. So it was just hype, basically, and the market was gapping up. I figured the way that looked to me, that gap higher in the futures, and then also how it started to fade this morning when the market opened. Here's the futures right here, and here's this bullish rising wedge I have marked out. This line here, this wedge, you can see it right there. The futures faded and opened the day recapturing that wedge. So to me, I saw that, and that looked exactly like a fake out, and sure enough, futures are selling off. So moving over to the Qs, we've got 214.50 right here. This is your support, and as you can see, look at the price action that we're getting. I'm looking at a 1 minute right here, just because trading's happening right now. But look, so we came right down to that 214.50. We opened the day, sold off. It was holding, but then when we broke, look, we broke 214.50, so that's your support line, and we broke. And then look at this rally right here. We try to kick back, and it fails right there. So there's your failure, and now it's selling off. So sure enough, let's look at my trading platform. This gives you a little bit better of an idea. I had it marked out 214.30 because on this 1 minute I was getting the wicks today, so you could see how it was holding right here. And here's your kickback right to it, and then failure. So selling should pick up right here. Should, doesn't mean it will. We could easily just chop around this 214.50 level some more, but at this point, at this very moment in time, there's nothing that tells me I'd want to be on the long side, and in fact I'd want to be on the short side, and I am pretty heavily. So also, let's see, Apple, I'm short Apple. There's the Apple trade selling off, that's profitable. I'm short XLV. That one, I'm not sure if it's, XLV, I'm down 2% on the trade because I phased in a little early. Let me show you guys where I got in on that one. But that one looks great for a kind of a breakdown. Let me see if I can find it. XLV, there it is. All right, so bearish rising wedge, and I got in on this one, I think right around here. So down slightly because this thing just went to the outer limits of the wedge, and we still haven't even broken down yet. So really, you need to wait for the breakdown of the wedge for that to play out. But we've got bearish divergence in play, so everything has been kind of a divergent high where it's making a higher price, but momentum is fading on the RSI. The way to read that, it's very simple. Just when you see a peak, and then you see a lower peak, and then maybe even a lower peak. And it can even go higher. It can make it just can't make an equal RSI reading. It just can't go above that. If it goes above that, then that burns through the divergence. So we're still have negative divergence. It can make equal or lower and then as prices are making higher prices, it just gives you an opportunity to anticipate a reversal and potentially add to positions. And then when you get the reversal, you make all your money. So waiting for this to break down, still hasn't done that. Another interesting one, MGM. This one did break down. Now it only has, here's your bearish rising wedge, but I only have a couple data points. I've got a reaction here, reaction low, another reaction. But looks okay because look, you had the breakdown here, and then you had the gap up today. So we gapped back, we recaptured the wedge, but then we sold off and failed. So when I see that kind of stuff, when I recapture a wedge, that's bullish, but then if it sells off, it shows the sellers just are there. The sellers are here and now, selling this thing down. And so I suspect we could do some kickback rallies, but at this point, this isn't a bearish posture, so I'm short this one as well, MGM. and who knows where we go, but we'll probably get down. That looks like a good level right there. I think we get down to there at least, and then maybe I'll look to cover down around $10. But that's down there a ways. I mean, that is a good 23% trade. So looking at that one and all right, so I mean, the point that I'm trying to make here is that when you're shorting a market, you have to always look for the fake out move. They're always trying to wash you out. They don't want a bunch of people, especially Wall Street, the professionals. If they're going to take a short position, they want to shake out the weak-handed shorts so that all the money that gets made goes to the few remaining shorts. And then also, if you want to take a short position, you don't want a bunch of people shorting with you, because if you have a bunch of short sellers that are shorting, then you don't get much of a move to the downside, because as things start to move, those short sellers start covering. They start taking profit, and more of them will cover the lower it goes and taking profit, and that creates a floor, that creates buying pressure. And so if you're trying to short, usually you're alone. Usually short sellers are, oftentimes the bulls will come out, because the bulls are the masses, and the bulls will come out and say, criticize you for being short, or think you're stupid, or tell you you're going to lose a bunch of money, all that, and you'll hear a lot more bullish, a lot more bulls than bears typically, and that's just because of the nature of short selling. And so, yesterday I saw a lot of people saying the stocks were going higher on my comments, and the Fed's going to prop everything up. And they might, I could be wrong still. Just because I'm right temporarily on this little move right here doesn't mean that I'm right for the big move. So, again, we'll have to continue to watch it. But I'm just saying, when I start seeing bulls kind of pounding the table that they're right, that usually gives me confidence that that's close to the end of the move. That's kind of what I'm thinking, is that we're close to the end of this rally. Futures they'll probably stop here with a gap down on Monday, but who knows? Maybe the selling pressure, a gap down on Monday would be the perfect short opportunity. That's what you want to see as a short seller, is a gap down. You don't want to see markets just crash intra-market. That gives the bulls an opportunity to get out if they're quick. That gives people an opportunity to get short. And again, you don't want a bunch of short sellers. So I'd rather see a gap down and then denying the bulls an exit and denying shorts a great opportunity to short. And so those short sellers they'll look to be shorting in here as we're falling, and that'll create a nice flush down that then I will be able to cover into. So looking at that, oil XOM's just popping a little bit. Again, still bearish. We broke this bearish rising wedge. So the measured move, what you want to do for these things is you want to look at the width of the wedge, widest part of the wedge, and I guess the wedge really started about there. So then you measure the move. Yeah, so down there, it's not a huge wedge. So that XOM has already played out for a big part of that, but I think we get one more sell off, and then down to this 36.40. That might be the end of that move. Or, like I've been saying, if we are in a bear market and this was a bear market rally, then expect a big impulsive sell off, a nice big leg down next coming. So doesn't mean we'll get it today or tomorrow or even next week, but it should start soon. That's my read on it. Let's see, what else is interesting? Trying to point out whatever. XOK, tech sector, it's just still in the wedge, so no sell signal there. Amazon. This is something interesting I was thinking about, and this plays into the fundamentals, but if the news is so bullish that the market's gapping higher based on the fact that maybe the economy is going to reopen, and they're going to find a cure. That's what the market was trading on last night. It gapped up and was based on hope that the markets or the economy is going to reopen, businesses are going to come back, and then they're going to find a cure, and everybody's going to go back to work, et cetera, et cetera. I think that's hope, kind of just not reality. But if that is true and the market's trading up on that, then Amazon should sell off, because Amazon was popped up based on the fact that everybody was staying at home and not going to stores and buying stuff. They're buying it online at Amazon. So that's just something to think about. I mean, I don't see any level right now, and I'm not really interested. But that if that's going to play out, then that would be a short. So I don't know. That's just something to think about. All right, guys, I'm going to get the video out. I don't have anything else interesting right now, so just wanted to point out the markets. We can look at the SPY before we wrap. Bearish rising wedge here. This thing, it could be adjusted, I suppose. You could put it maybe like that. That's not bad, because you got a reaction right there. Kind of a couple candles, wicks below, but no bodies. Bodies closed right there, and then you've got wicks. So that gives us 3 reactions. That's a little cleaner. So look for a breakdown of the bearish rising wedge. Probably going to come on Monday. If they pop the market and just hold it within the wedge, we could even have Monday could be another ramp day where they try to run it up, and then Tuesday would be a gap. But I suspect Monday or Tuesday you should see a gap down. That's just that's just what the charts tell me are going to happen. So thanks, guys. Before you leave, hit the like button. I appreciate it, and I'll catch you guys next time.